everyone. This is Carla Miller. I've been with BECU for 9 years. I've been in banking for many, many years. And we love helping our home buyers get into homes. We have Lorin with us today and Casey. And Lorin, would you like to introduce yourself?
Yes, I'm Lauren Jurgensen, and I'm a mortgage advisor. I happen to work out of the Bothell NFC. So I've been in the mortgage industry for a number of years. I've been with BECU for almost 6 years now. I started in 2015.
Great. And Casey.
Hello, everyone. I'm Casey Hangsleben. I work out of our Bellevue office. I've been with BECU since 2012, and I did a few years as a mortgage processor, and now I'm a mortgage advisor. So we look forward to answering your questions today.
Yep, so this is a panel designated to answer all questions that anybody has. So that's what we're here for today, is to answer questions that you have about the home buying process. So we'll get started. So we're going to kind of talk a little bit about the transaction timeline. And if anybody was already in the last two sessions about home buying, we went over all of this, but we'll do it really quick again about a pre-qualification. So before you even go out to look at a home with a real estate agent, it's really important that you know what you can afford. BECU does have, through becuhomeloans.org, you can click on the link that says get pre-qualified, and you'll punch in your own numbers of your gross monthly income, your debt payments, and it will come up and tell you exactly kind of an estimate of what you can get approved for. But that's just a pre-qualification. So when you're really ready to start to look, we would want to get you conditionally approved. So what that means is that you're going to meet with a mortgage advisor. We're going to submit an application. We're going to verify all of your income, your assets. We're going to pull your credit. We're going to send it to underwriting and get you a strong conditional approval that's good for 90 days. That way, when you find a home, you're ready to go. And in the market, as we talked about in our last session, the market is very difficult right now to get a home. So it's really important that we make it a strong offer as possible with that conditional approval. Now, I would love to hear any questions. We're going to go through a little bit of a timeline here with a calendar, but we would like to be able to answer any questions that you have as they're coming through. And I just wanted to see with Eric if he has any questions that have come through yet.
So we do have one question, actually, that came in from a gentleman named Jake. He said that he has, in the Seattle area, heard of many, many people losing out to all cash offers. He's wondering what your experience has been with that, and what the trick is, if there is a trick.
Well, there really isn't a huge trick. I think it's important that you have that conditional approval. As a loan officer, I always call the listing agent when an offer's given to the seller and introduce myself and let them know how strong of a buyer that they are and have that communication open. I think that's one of the biggest advantages that will help to get the offer accepted. With cash offers, they could go away tomorrow. They can go away really quick. And so sometimes sellers want to sell to a family, or maybe the seller wants to sell to somebody who is like-minded as they are. And so they do look at all the offers. And I haven't seen a lot of cash offers. I've seen them on the the east side of the mountain, just because the prices are a little bit low. But in the Seattle market, we're still seeing people that are not doing cash. We see offers that are way over the asking price, but not just cash only.
Yeah. All right. And then looks like there was a Carol from question I'm sorry, a question from Carol here in the chat as well. Looks like there may have been an answer, but I'll ask you as well. When considering debt to income ratio, is there an assumption as to the interest rate on credit card balances? She said that she has two that are on promotional 0 interest.
Okay, and then I'm going to bring Lorin in here to answer that question.
Oh, see, I'm here. Welcome. I'm glad to join the conversation, so that part is good. Now, this particular question has to do with credit cards and 0 interest rate. Even if you have a 0 interest rate, you still typically are making a required monthly payment, because your goal is to pay off that debt. So we're going to use that minimum amount of monthly payment as part of the DTI. Now, in some situations, if you have a student loan that's in deferment, the minimum monthly payment may be zero, but we still have to anticipate the means for you to repay debt. We've all heard about the ability to repay, which is actually a law passed in 2014. So we have to take that into consideration, that you have the ability to repay all of your installment and revolving debt.
All right. And so it sounds like then that the interest rate itself on the credit cards isn't as important as the balance then, right?
Correct.
Or the potential balance.
The
Okay.
balance and the credit utilization on that card, because that does have impact on your credit score.
Perfect. All right. And then we had another question come through from Joanna. Which credit bureau does BEC use to pull our credit score for mortgage in particular? I'm assuming.
Right, and Casey's going to jump in here and answer this one.
All right, great. Well, give me an easy one, so I appreciate it. We use 3 different bureaus: Experian, TransUnion, and Equifax. And then we're going to use the middle score. So, if you have a 650, 700, and a 750, we'll use the 700.
All right. And so then another question here from Catherine. How can I get rid of PMI?
Once you have 20% equity, you can request to have the private mortgage insurance removed from the initial purchase price when you purchased the home, whatever the value was at that time. You could refinance if you feel like the value is a lot higher, or you could request the mortgage insurance company to do an appraisal to see if they can remove the mortgage insurance.
Perfect. Let's see. There is another one coming in here from Stephen. What can I do to make my offer as appealing as possible in this super competitive market?
So I'm going to go ahead and take that particular question. So there's a lot that you can do to make your offer as appealing as possible. So in the session prior, I know the agent talked about that really strong relationship between your real estate agent and your lender. That is incredibly critical. In regards to the offer itself, your agent's going to have a lot of counseling. On the financing side, your financing element is going to be pretty standard and straightforward depending on your situation. Now, we do want to encourage you to be mindful. There's many real estate offers that are going out there today that have escalation clauses or the potential for a low appraisal. So we want you to be thoughtful in your offer making process as far as what your situation is and the level of risk that you're willing to take in making that offer. But typically a seller is most interested in what their net proceeds are going to be at the end of that transaction. So if your financing is stable and strong and you have a great agent rooting for you and presenting your offer in the best possible light, you have a strong opportunity to win those offers and to become a new homeowner.
Thank you very much. And then with those escalation clauses, this is just kind of a common question. With the escalation clauses, how high should you anticipate being willing to escalate?
That's a really good question. And again, I personally would defer to your real estate agent. They're going to have started a dialogue with the listing agent. So they're going to have a sense of what is going to be needed for you to be the high bidder, for the high offer to win that particular contract. So the agent's going to come in, they're going to give you good counsel. Some of that varies by region, right? Everything over here in Western Washington, the escalation clause could be very different than what you're going to see in Central Washington or even in another state.
All right, thank you. Let's see. Okay, and another question here. How long is the current process from start to finish on average for buying a home?
Casey, I think you're up.
All right. Well, it really depends on, if you find that home right away or how long it takes you to find the home. But to start out with once you come talk to one of us and, Carla or Lorin or I, and we get the application going, it's probably going to take about 5 to 10 days to get that conditional approval from the underwriting team. Then once you submit your offer and get it accepted, it's going to take about 30 days at that point. So it just kind of depends on when you get your offer accepted, and it's usually about 30 days. So, but sometimes you're going to buy a pre-sale home where you're going to be going through the construction process, and that can take a couple months to 6 months to a year. So depends on if the home's already built, or buying a pre-sale new construction home. So
awesome. All right, thank you. And then
we could go back to the slide that has a calendar of the timeline too, and kind of go over that really quick.
Sure.
That goes over like what we need to do from the day 1 all the way to day 30. Okay, so as you can see here, like your offer is accepted. So you, the seller's accepted your offer, and you are excited. You can't wait, and so you're going to order your home inspection. And your agent is going to help you order the home inspection. They have a list of inspectors that they use. In Seattle area, we see a lot of sewer and home inspections, because sewer is it could be a big issue. Sometimes they have the inspections done prior to even making the offer. I've seen some where the actual seller has done the inspection prior to any offers coming through, so you can review it prior to putting your offer in. And then, as you can see, a few days later, what we're going to do, BECU, we're going to get your contract from your agent. We're going to lock your interest rate. We are going to send out your disclosures with all of the breakdown of the closing costs on that particular home. And then you're going to take your earnest money deposit to escrow, and escrow is going to hold your earnest money until the end of the transaction. At the end of the transaction, the earnest money that you put down on the home will be subtracted from the amount that you bring into closing. The home inspection you'll review your home inspection once the inspector has gone through the house, and the inspector goes through everything, every nook and cranny. They check for insects in the attic. They check for water damage. They even will check the oven temperature to make sure it's accurate. So they check everything, and you can go to the seller at that time and say, hey, there's all these things wrong with the home. Here's a list of A, B, and C. We want you to fix them. Or maybe the seller will give the buyer some credit towards closing costs, a dollar amount to instead of fixing the items. Or a lot of times right now in the market, we're seeing a lot of inspections waived. I did have a couple, though, that there was inspections, and the seller ended up paying some of the closing costs for the buyer just recently. So after that is done, we're going to order the appraisal. We want to get that ordered right away, because the appraiser is going to determine the value of the home. It's an inspection just like the home inspection, but they're looking at the value. So they're going to pull comparable sales in the area to make sure the value is there. And then our processors, we all have a processor that we work with that handles all the details on your loan. They may require us to get a few more documents from you, and we will be your main contact for the transaction between us and the processor, and finish up all the details on your loan. When the appraisal comes back, you get a nice copy of it, a nice colored copy of all the home, all the pictures of the bedrooms. I had one today that I saw that had a little dog in the background. It was hilarious. So you get a picture of all the rooms, and it goes through all the details on how the appraiser comes up with the equation. It's pretty detailed. And then once you get closer to the end, we send out something called the closing disclosure. And the closing disclosure you have to review the closing disclosure for 3 days prior to signing your loan documents. And the closing disclosure has all the final details on the loan. All the numbers are there, and we go over that with you. And then once that has been reviewed, we'll send loan documents to escrow, to the escrow company. The escrow company will call you to set your signing date and time and tell you exactly how much money that you need to bring to closing. And then you go to sign your loan documents the day before closing. So you sign all the documents with escrow, and escrow sends BECU a packet of all your signed documentation. And then the next day we fund the loan. After we fund the loan, the deed of trust gets sent to the county for recording. And as soon as the recording numbers come back is when you get your keys to your house. So as you can see, there's a lot of things that are happening in this 30-day window that's really not even listed on this calendar that we are doing. There's so many third parties and so many people that are involved with all the details that it does take a good 30 days to complete from start to finish. And now we'll go back to Eric and see if there's any other questions.
Oh, we're all back. So there was one question that came in from John. What is the single most avoidable mistake you see when people make their first-time home purchase?
I can start with that question and then we can all chime in if we have different responses. So, initially, the number one mistake, there can be multiple number one mistakes that do occur, but the thing that I see most frequently is individuals have not consulted with a professional prior to go out there seeking that home ownership. So, I always encourage people meet with a mortgage advisor, get that counsel from a professional so you can explain your situation and your scenario. Maybe take one of our first time homebuyer courses, one of our webinars or self-paced courses. I also tell people work with a real estate agent that has a lot of experience that can tell them the most blunt possible truth about the current market. So those are some of those things. Sometimes we see mistakes that do occur through the financing process where people think that it's a good idea to move money from one account to the other and back again. So sometimes there's mistakes that are made that complicate the situation during the transaction itself. So that's where that upfront counsel could prevent many of those scenarios in our discussion and conversation. So professionals have that point, make an appointment, meet with them, get good counsel, and get knowledgeable counsel. And that is not your coworker in the cubicle beside you because they have nothing to do with the mortgage or the real estate industry. So, Carla, what are your thoughts?
Yeah, I agree with you. Education is the biggest piece. I've had people come to me that are like, they went and looked at a house and they're like, well, we're going to put an offer on a house. And I'm like, well, okay, are you approved? No, we're not approved. And you pull their credit and their credit's really low. They didn't know they had collections. They didn't know that they had things that they hadn't got resolved prior to. And so we're scrambling at the last minute to try to help them to be able to get approved, to get this home that they want to put an offer on. But just having that education and being ready to go once you do find that house is so important, and not rush so quickly because you've already done all of the work from the back end. You are ready to, I think you're ready to go. Casey, what about you?
I think both of you answered it very well. One of the big things is, having a conversation with us. If you're not, we can pinpoint where you're at, and then we can help you get there. So even if you want to buy right away, it might not be feasible right at the moment, but a year from now, we can help you get there. So with first-time home buyers, a lot of loans let you do 3% down. So that's where a lot of people don't necessarily have the funds saved up right away, but that's one area where we can help you get prepared to show you the numbers so that you know what to expect for a monthly payment and then funds due at closing. Another thing too, kind of a mistake that I would say to just that you want to be aware of is, you can get yourself prepared as far as your debts before applying, so that, because usually the credit report is going to lag behind about 30 days for those monthly payments reporting. And if you're looking to pay off some debts, you may want to wait that 30 days so that you have a lower debt to income ratio, lower minimum monthly debt payments. And then please do not buy a car during the process, because that sometimes can throw a wrench into it for sure. So it's just, you can't have enough education from, one of us mortgage advisors or from your real estate agent. So just educating yourself is the best thing you want.
Sounds good.
Casey, I'll conclude on that is because of the fact that we're all stating the same thing. Preparation is key. And the more prepared we are, the better the results will be. And I want you to be so prepared that when you get into contract, then we will then do the heavy lifting to get you into that closing status and into home ownership. So take the time to be prepared and then partner with BECU and an agent that it has your best interests at heart.
Excellent.
Awesome. And we also have a question from Joan. Joan asks, will a down payment of 33% make my monthly payments considerably lower?
So, Carla, do you want to start with that?
Well, I was going to give that one to Casey. What do you think?
Oh, Casey, sure. Jump in, Casey. This is a good question. 33% down. They are prepared.
Well, yes, increasing the down payment will decrease your loan amount, which then is also going to decrease the principal and interest payment for you. So yes, putting 33% down versus 20% down, is definitely going to help you out in regards to having that lower monthly payment. So.
Yeah. We can always play with the numbers. That's what I tell people too. We could play with the numbers once you find the house and say, okay, if you put 33% down versus 30 versus 25, is it better to have more money in your savings account to have for an emergency than it is to save so much money per month? So everybody is a little bit different. So that's something that we can help you, determine.
All right. And next we have a question from Johanna. I've heard medical debt in collections doesn't count against you. Is this true?
It doesn't count against you, but it did. As soon as it hit your credit report, it dinged your credit once you have that medical collection. So once that you have derogatory credit that hits your credit, it hits it and then it's spent. It's not going to keep hitting your credit, making your credit score lower, unless it's a revolving credit card that you're not making payments on. But if you have like a collection or what else would there be? Like maybe you forgot to make your monthly payment on your Visa card one month. Well, that already hit your credit that one time. So now you have to have a healthy credit to offset the negative. So we have to get your credit score up by, doing some extra work, and we can help you with that to try to overcome that negative hit on your credit. You guys have anything to add to that?
Yeah, I love that. But anytime you have a negative credit scenario, you always need positive credit to offset that. So Carla is exactly correct. If you have a scenario that you have an anomaly in your life where we have a negative element, you actively need to work to offset that with positive credit. We see people that have had a bankruptcy in the past and they've decided, I will never, never have another credit card again. The problem is they've not reestablished their ability to use credit, and that is a negative. So we always tell people, if you have an anomaly, a negative financial situation, you want to actively work to create a positive payment history so that you can recover your good, valuable credit score.
Awesome. And we just got another question that came through from Carol. This is a related topic. Is requesting an increase to a Heloc or home equity line of credit limit the same full process as original loan request, or is it different?
So Casey, you want to take that question? You would be good at it.
Yeah, I can take that. So with BECU, the home equity department or the member consultants will have to do a full credit check for you to increase that limit. So it is a new application. But with BECU, I believe the consumer department only pulls from one bureau. Is that correct?
TransUnion, yeah, that's correct. Yep. So the long story short on that one is that no, it's not quite the full process, but there is definitely a little bit of footwork that needs to be done with it. If you have questions further about that, you can stop by any one of the branches or feel free to email communityrelations@becu.org. Another question that came through is, what upfront costs aside from the down payment should somebody who's in the market for a home anticipate?
About 2 to 3% is what usually is the closing cost range from. So closing costs are third-party charges. They're the title, the escrow, credit report fee, recording fees, what am I missing? Flood certification fee, and then also your reserves for taxes and insurance. So if you have taxes and insurance included in your payment, we have to collect a few months worth of reserves so that we have enough money to pay them when they're due. And your taxes are due every 6 months, and homeowners insurance is due once a year, and we pay it for you. but we just have to have a little bit of padding in the account to have enough set aside to be able to pay that.
All right. And then the next question that I had was, I apologize, one moment here. What all types of insurance coverage are generally needed for a home?
So in regards to homeowners insurance, so basically we're looking for hazard insurance or homeowners insurance. That's going to cover any damage to your property over time, right? In case you had a tree that fell on your roof or a water pipe that broke. So homeowners insurance is always going to be required. Now, when we're discussing our insurance, also some individuals sometimes confuse homeowners insurance with mortgage insurance. Mortgage insurance has nothing to do with the property. Mortgage insurance is insurance if you're putting less than 20% down. I always tell people kind of think of it as gap insurance. A lender will only lend up to 80% of that collateral. That's our greatest level of risk. So if you're putting 5% down, think that the mortgage insurance is stepping in that gap. They're feeling that gap of 15%. So mortgage insurance is for the benefit of the lender, but homeowners insurance is for the benefit of you, the homeowner, to protect your property. Do you think I answered that question? Was there anything else that I left out?
There could be flood insurance if you live
Oh, there
if your
could
home is
be.
in a flood area. There could be. That doesn't happen very often, but we've each probably had it at least a dozen times in our careers, where somebody has had flood insurance where their home's in a flood area and they have to have special coverage for that.
The other thing would be with the condos. A condo complex or HOA is going to have a master insurance policy for you. At times, it does cover the interior of your condo unit. If it does not cover the interior contents, you will need to get your own condo interior policy, which they call a walls-in policy. But with that said, so it depends on what the coverage of the whole condo complex has on your larger complex itself.
So I'm going to piggyback off of Casey just really quickly. For condo insurance, though, even if the HOA has coverage for walls out and walls in, we're going to encourage you to have your own policy to cover your personal belongings, because the HOA policy does not cover any of your personal belongings. Also, having your own policy can help you with your deductible for the HOA if there was some kind of catastrophic event.
And it's relatively inexpensive too, so compared to a normal single-family home policy. So,
all right, it looks like I got one more question here in the queue from Dana. What is the rule of thumb for when to refinance? So I think the question really is, like, how do I know when it's worth refinancing my existing mortgage?
So Carla, what are your thoughts on that?
I was going to ask Casey what you thought. Okay, so it depends on what your current interest. There's a lot of different. Everybody has their own specific needs, right? So it depends on what is your current interest rate. Are you wanting to lower the term of the loan, and that way it will lower the interest rate? Are you wanting to get cash out? Like maybe you want to consolidate some debt. Maybe you need a new roof. Maybe there's other things that you want to do to get some extra funds from the equity of your home. But you want to. It's really everybody has their own specific needs on that. I think that knowing what your goal would be, like what's your goal to refinance? If it's to lower the interest rate, you bet. Let's look at that, and we'll bring up an amortization calculator, and we'll see if you keep your current rate where it is right now, and if you refinance to a lower rate, what will that do, and how much money will you save? So we can help with that determination as well. Anything to add?
I think that was a really good explanation. I also tell people sometimes during the season of life that you're in, refinancing sometimes is prudent and makes sense for you to do. If you're heading into retirement, sometimes refinancing for a longer period of term just to lower your monthly payment to meet your budgetary needs could have value. So it's always good to have a conversation again with a professional because they're going to discuss all of your personal situations and needs moving forward.
All right. Well, thank you all so much for answering those questions. I don't have any additional questions in queue right now. Is there anything that any of you would like to add before we go ahead and wrap the session up?
I think they were all very good questions, and we appreciate everybody attending. So definitely kept me on my toes. Let's get my answers out there for you. So
great.
I
Well,
think that we talked about in the other sessions as well is that there's not a stupid question when it comes to a mortgage because there's all everybody has such a different specific need, or there's so much to mortgage, and that's one reason why I love this job is because it's always different. Every scenario is different, and so it's important that you talk to somebody and to help you dissect it and to figure out what's best for you.
And I'm going to piggyback off of Carla too, because I'm going to encourage people meet with your mortgage advisor, and all of our NFCs have mortgage advisors assigned to them. The reality is your mortgage is probably going to be your biggest liability or your largest debt that you're going to manage in your entire lifetime. So having a good understanding of what it means and how you're managing that debt is invaluable for you moving forward and in building your future wealth. Homeownership is just one piece of that equation. So I'm glad people came today. I hope they enjoyed themselves. I hope they learned something too.
well, that looks like that's about the end of the session there for us. If you end up coming up with any questions that you maybe didn't ask or that you think of later, please feel free to send us an email at communityrelations@becu.org, and we'll be more than happy to get one of our mortgage advisors in touch with you. So thank you all so much for joining us, and everybody have a wonderful rest of your evening.
Thank you.
Thank you, guys.
thank you.
I think that there's one more session after this that you can go to the keynote speaker. So you can go to back to the homepage and listen to the keynote speaker, and that will be the last part of tonight. So thank you, everyone.
Yes.
All right.
Yes, thank you.
Thank you.
Good evening.
This is the one place where you can grow, where you can be yourself, you can be real. You don't have to be a cookie cutter employee, and it advances you. It advances you emotionally, physically, and it's just an awesome place to be.
There are so many things I enjoy about working at BECU. I think the overall theme is really people helping people. And what that means to me, it allows me to, be myself, come to work every day, be very real with people, especially now more than ever in their time of need. I really want, it allows me to be human.
I love what I do. I love the company I work for. I love helping members. I love just helping people.
Yeah, I do feel satisfied knowing that my actions throughout the day help the members with any of their financial needs.
I just love making them feel help, in everything what they need. I just love seeing those smile that, oh, thank you for helping me. That makes me feel so accomplished.
Helping members, it's a joy. I mean, it's making a difference in somebody's life, in their financial life, that brings a lot of pleasure to me, and also helping my colleagues,
I really like the attitude of everyone here, just the general positive feeling that I get from working with all the different people at BECU.
What made me proud to work at BECU is the care that I receive, as much as the care that I give out.
Especially now in this environment, members need us now more than ever. And watching my large staff interact with members on a variety of needs on a day-to-day basis really brings me joy, knowing that we're helping them in their times of need.
It's that connection with the community, both that respect that I think BECU carries within this region,
and the longevity of it. Just to think about how many people in our community have been able to buy homes and save up for retirement and drive cool cars and meet financial goals because of our commitment to the community.
But in particular is being able to partake in someone's journey. And my quote has always been, to be but a grain of sand in someone's journey, I have done my part. People helping people is what we stand for.